Hi everyone, hope you're all doing well, and today we are talking about the 3 stocks that I bought last week and the 2 stocks that I sold last week. So this is just me keeping you guys in the loop with what I'm buying and selling, and that's why I do my portfolio reviews as well, so you have that transparency. So every month you can see how my investments are doing, see that I'm still holding the investments and the stocks that I talk about on the channel. And yeah, we just built this channel really on transparency and actually making money in the long run in the stock market. It's not a channel which is a clickbaity. We're not focused on getting the views in, we're not focused on having clickbaity titles, and we are not focused on the next hype stock and going, oh, this stock is going to 10x, it's the next Tesla, and then when that stock's not popular anymore and maybe the stock's gone down 30 or 40%, we don't go in the background and then go, right, I'm just going to sell that, and I'm not going to talk about it anymore and hope no one mentions it. We don't do that on this channel. It's all about transparency and making money in the stock market in the long term on great companies. And yeah, obviously that's what we try and focus on. That's why I show you guys my portfolio all the time. And today, just a little bit of an update with the moves that I'm making into the stock market. But yeah, these are the moves that I made last week. If you do want to know when I'm actually buying and selling companies in real time, make sure you join the Patreon. The link is in the description. That's where you get my instant buy and sell alerts, as well as 2 exclusive videos a week. They can be portfolio reviews, a private Q&A live stream. We also do education video series where I give some tips on what I look for in the stock market on a certain subjects that the guys on Discord can vote for. And yeah, there's a Discord on there with 600 members and some amazing investors as well. So if you do want to join that, the link is in the description. But yeah, we'll go through a bit of a recap really with some of the moves that I made on the stock market last week. And what we'll do to start with is we'll actually do it the opposite way around and actually start with the stocks that I sold this week, and then I'll move on to the stocks that I bought. So there is only one US stock on this list, the rest of them are UK stocks, and if you could smash the like button, and if you are new and you find this useful, please subscribe. But yeah, these are the stocks that I sold last week. So there was a 10% stake of Skills sold, so I'm still holding plenty of shares, but I did just trim the position by 10%. The reason why I trimmed the position by 10% is that, as I'm sure many of you guys know that do follow Skills, last week was a fantastic week. And only a month ago, this stock was all the way down at $13. And last week, we had a massive jump in one day. I can't remember exactly which day it was. There was a day where the stock actually went up 30% in one day. And it's just a complete change of where we were at a month ago, where we were down at $13, and then we were back up at $22. Now, because there was such a big massive jump, and what I've been doing recently is I've been going through my cash pile quite heavy on this big massive growth pullback. And Skills is a company that's been hurt by a short report, and then it had the double whammy of the growth pullback. And the stock's been hurt, it was up at like $40, back down to like $13. And I've been heavily buying this stock and averaging in. My average went from being about $20, $19, and I got it all the way down to $15. So I've been buying, and that also means my position size has got bigger. Because of that getting a bit bigger, my Skills position is 5th biggest position, and because of it being my 5th biggest position, it's a bit heavy. I mean, it's a good company, and I'm a big fan of it, and that's why I'm still holding plenty of shares. But realistically, when I'm getting up there to my biggest position, there's no doubt, like Skills compared to a Facebook, there's a little bit more risk with a Skills compared to a Facebook. And I was like, I don't know how big I want it to be, and I've kind of got the rewards now because my average is lower and I'm going to make more money on the long run. At the same time, it does need a bit of balancing out, especially with the jump that it had where it went up 30% and also having a low cash pile. So I thought, you know what, very quick jump, let's just trim the position by 10% and then we get some cash. We balance the position out a little bit as well. And yeah, 30% in one day as well. It was a crazy move. So yeah, it was good to make some nice, easy money really on Skills. It was only a company that we've been averaging really heavy over the last month, and yeah, we got the rewards from averaging in and just build up that cash pile really. So that was just really, Skills was still, I'm still holding plenty of shares. It was just a 10% trim, get the cash pile up and get some nice profit. We're up over 30% really. Very quickly from being down quite a bit on that position. So yeah, just getting them rewards from averaging in really. I'm sure some of you guys did something very similar with that one. And number 2 was Rightmove. So this was a company which was a bit different from Skills because I sold completely everything in Rightmove. There's a few reasons why. Once again, very similar to Skills, I wanted to get a bit more cash. So that was one reason. Also, I was taking on 2 new positions this week, and I don't want to have over 30 positions. It's just like you nearly get into an ETF, and it's a lot of work to keep up with them all. So there was that because I was taking on more positions, I wanted to get rid of it as well. Also, Rightmove is a company that which I'll actually talk about a little bit more in a second. I felt like is probably my worst stock in my UK portfolio at the moment, and it hasn't been performing, and I thought there was a few reasons for that. So yeah, I also took that into consideration as well. And the last point as well is that I also got my dividend as well. So after getting, I only took a little gain on this one. I think it was only like 5%, and then a couple, a little bit of a dividend as well. So it wasn't too bad, 5%, and I've had this company for about 6 to 8 months. Isn't awful. Obviously for me, I want to try get 20% return on, maybe a bit more every year. So it was kind of like nearly there, maybe a bit underperforming. So it wasn't terrible. Some people would be actually very happy with that. But yeah, for me, for what was there, it just wasn't worth holding it. And the big thing for me, the major reason why I actually sold Rightmove, like I say, it was probably my least favorite company in my portfolio. The reason why is because every so often when I go through my portfolio, I just do a quick recap as if I was a new investor, how's the company doing, I'm still happy with that investment. And it was Rightmove recently that I went through, and I thought, well, it's not performing that well, it's not attracting new investors, the share price isn't moving up, is there a reason for that? So I had a bit of a big deep dive back into Rightmove, because I was also considering if it's not performing, I might actually go buy some more shares. And this was actually when I was doing the free UK stocks to buy series about a week ago, 2 weeks ago. So this is when I was actually doing this. And I went back through the earnings report. I looked through the earnings report, and the profit and the revenue was down 30% year over year. And I thought, that's not actually a really good performance. Sure, the CV situation will have hurt it, but something like Rightmove, that's an online company, should maybe be performing a little bit better. And one thing that I'm starting to see a couple of bad companies use, so this is the get out of jail card, is that if they aren't performing very well, they go, oh yeah, COVID, bad year because of COVID, it'll be okay next year. Yeah, it affected us really loads. And I'm seeing people still use that, or companies still use that all the way through Q4. Now, don't get me wrong, if you like a travel play, then maybe you can still get away with that a little bit, because the travel is very restricted. But anything like an online company or something, I think I even saw Workhorse, one of their reasons why it was oh yeah, we only delivered 6 vehicles instead of 12 vehicles, it's because of COVID. And it's it's like the get out of jail card for not performing very well financially. And I think Rightmove were kind of using that a little bit. And Rightmove is a company, obviously it's online, it's in the housing sector in the UK. I looked at the housing sector, and I've got shares in Taylor Wimpey and Barratt Developments that are performing excellent. I think Taylor Wimpey's up 30%, I think Barratt Developments is 40 or 50% up, and I'm also getting dividends from them guys as well, and they've performed very well. And the housing sector in general, whenever you go down the street, I don't know if it's the same way you guys are, but any houses that literally go up near me, so quickly they're selling. Within the month of going up, there's just queues of people wanting to get in and go view them. Same for renting as well. Renting seems very strong as well. I actually put my one of my flats up for rent a week ago, about 2 weeks ago, and there was 9 people that came to view it in the first 2 days of going it up, and it was gone. And it just seems so strong. So I was looking at Rightmove going, everything that I've seen from the housing sector and Taylor Wimpey and everything is strong, and you go through the data, and housing sales are either equal to where they were or even higher than where they were. And I was looking at Rightmove going, well, why aren't you performing? Because your sector is red hot right now. Even maybe you could argue stronger than CV, but these guys are still blaming CV. And I was like, okay, this isn't linking up. I even looked at Rightmove, I think their revenue and profit was down 6%, but not 30% that was Purple Bricks. But Rightmove's was down 30%, and I was like, how are you down so much? And then obviously Rightmove offered a little bit of discount when the CV times were happening, and then by August it got back to normal. But you're thinking, okay, but then you've got September, October, November, December. You've still got plenty of months where you've had normality, and in fact your sales should probably have been even stronger than what they were last year, if not equal. But the company revenue and profit was down 30%, and I was like, it's just not linking up. And obviously they blame the CV situation, but I thought, I can allow you to not have your sales or profit or revenue down maybe 10%, that would be fine, maybe even up to 20%, but 30%'s a lot. And then I went on to what the comments were from the CEO, and the CEO also said, oh yeah, and 2021 might be in sort of line with 2019. I was like, hold on, so you're only now next year, when the housing sector is pretty much back to normal, in fact it's probably hotter than what it was in 2019, you're telling me that you're now only going to get in line with 2019 results. Now, don't get me wrong, I might get this wrong and they might have been really sandbagging their guidance and playing it safe. But I was looking at that and thinking, there's no way you should be performing somewhere near 2019 levels. You'd expect them to probably be even stronger. And there was no, from what I could find, there was no update of like, oh yeah, the back end of 2020 was really strong, or the start of 2021 is really strong. And I was like looking at that situation going, it's just not linking up. Like, this sector's really hot and I'm not getting hot forecasts from these guys. And also, this company's not trading at a cheap valuation, you know. This company's like, I think the last time I checked was like a PE ratio of like 30 or something. And you're not exactly picking a company at a cheap valuation here. You know, this is pretty much priced at a decent valuation and there's pretty much struggling to beat 2019 numbers. So I was looking at this company thinking, okay, maybe it's just time where Rightmove's actually just getting caught up with the competition, because it does own a big, massive share in this sector. Or people are just thinking, okay, we actually don't need Rightmove anymore, and not actually using their platform to advertise their properties. Or even maybe they're just selling that quick, they're not actually going to Rightmove to advertise. But whatever the reason is, I just looked at Rightmove and I just went, you're not financially performing enough for me to keep you here. Like, I think I can sell your position and go to a new company and make more money. Like I say, you know, I might look a bit of an idiot because, you know, they might have just been totally sandbagging guidance, but from what I've seen previously and what they're offering in guidance, it just wasn't sitting well with me. And I just made that decision that I think, okay, before I'll actually jump here before I'm pushed and think that I might dodge a bullet, we'll see what happens. But I just thought there was better places to put my money than this company, which I was a little bit unsure on. And I think it's always, if it's a case where you're always willing that if your company's, this is Rightmove's pretty much my worst performing stock in my UK portfolio. And if I'm looking at Rightmove and I'm thinking, I don't really want to buy any more shares, there's probably something going on there that isn't probably great. So yeah, I took that decision to move that money to somewhere where I think I'll make better money. So those are the two stocks I sold. Well, one stock that I trimmed and one stock that I completely sold out of. So now we'll go across to the 3 stocks that I bought. So these are the 3 stocks that I bought this week, 3 UK companies. I was a bit lazy on this when I wrote the ticker symbols down instead of the company, but Cake Box, Best of the Best, and also Hotel Chocolat. Now this one here, I did buy this one technically, but the order hasn't gone through on trading 212, pending 212, typical. So I am waiting for this one to go through. So actually recording this actually hasn't been bought yet, but I have put a buy order in, and that's to increase my position by 10%. The other 2 are new positions, very small positions. I'll talk about that in a second, but yeah, I am waiting on that one to go through. A little tip as well, I actually looked at K-Box and Best of the Best, and they were taking ages to go through on Trading 212. By the way, have you noticed Trading 212 actually aren't still accepting new users yet on the platform? I thought that was really weird. Probably a topic for a total another day. But K-Box and Best of the Best were taking days to go through. So what I actually did is I thought, Trading 212 actually blamed this on like liquidity and not being able to put the orders through. I was like, but it shouldn't take that long. Sure, there might be a delay on it, but you know, it should be like maybe a couple of hours, not days. And that was when I sent them a message. So what I thought I'd do is I thought, well, you know, I've got a DeGiro account here. They're on DeGiro. By the way, if you do want a DeGiro account, there's a link in the description. I went on DeGiro, which I use quite a bit for my US stocks. And I thought, let me try buy these smaller UK market caps on DeGiro. Put the order through, went through straight away. So it was a classic case of like Trading 212 being a little bit like telling a few porkies, you know. I won't say too much because last time I had a go at Trading 212, the Trading 212 fanboys came out and attacked me, so I'm not talking too much about that one. But yeah, DeGiro, the orders went straight through, so I am buying these on DeGiro where I normally buy everything on Trading 212 for my UK stocks. But yes, this is a bit of a nightmare because this is a small market cap company, but my rest of my shares are on Trading 212. So these part of me thinking now, do I maybe get break even, sell out my Hotel Chocolat and move that across to my DeGiro, because it's just going to be a nightmare to average down and if I want to sell it. So just a quick tip for you guys, if you are looking at buying some smaller market UK market cap companies, Trading 212 is probably not the best place, as I found out. Maybe look at another broker if you can. I think these aren't on free trade, which would be another good suggestion, but DeGiro, it seems fine, so the only thing is you won't be nicer if you're considering that, I guess. But yeah, anyway, the whole point, what I was trying to go on to, the whole topic of this video is the 3 stocks that I bought anyway. So yeah, these are 2 new companies. This one's actually reporting earnings coming up this week. I'm a big fan of this one. The only problem is I'm breaking my one rule. I'm buying a company at 52-week highs. I always say, I do like portfolio reviews and I go, what did you buy it at 52-week highs for? Come on, how many times do I tell you not to do that? Wait for a dip. I mean, I tell people all the time, don't buy at 52-week highs. But here I am, I'm buying at 52-week highs myself. We'll see how it works out. Anyway, the reason why I did buy it at 52-week highs is because I want a piece of the cake. I want to get involved in this stock. I want to have some money because I think it's a great company. Don't get me wrong, the valuation is a little high. And ideally, earnings come this week. If we have strong earnings, the company drops 10%, 20%. Ideally, I want to probably quadruple my position size from here. So, if it can stay flat for a couple of months, if it can drop down for a little bit, just like the S4 Capital situation that we had back in February, that would be absolutely amazing. I could quadruple my position from here, from where it is right now. And yeah, I want to buy more of it, but I just thought, let's have a little bit of it here. If it carries on going up, I have some involvement in it. If it does the ideal situation where it flatlines or even goes down, then I can get a decent position. So I'm playing that one from that point of view, and we'll see how it works out. But I have got a full video on it that I did last Monday if you do want to check it out on that one. Best of the best, I'll probably do a full video on this one at some time. This is a little bit better because it was, new position. It was on a 20% dip, I believe it was. Buy some shares, and same again, if it flatlines, goes down, I can buy some more. If it goes up, I've still got some involvement in here. But I feel a bit happy with this one because I'm buying it on the dip. The only problem I have with this one is just that it's very, same again, it has gone up a lot, but at the same time, the business model is very easy to copy. A cake box, for someone to get the amount of stores that cake box has overnight would take such a long time. Best of the best, the business model can be copied a little bit. So the moat isn't as big as like some other companies, for example, but I still think they're doing fantastic, and I think they will still carry on doing fantastic. Both of these companies won't be a company that is the size of a Hollywood Bowl, Greggs, S4 Capital, Boohoo in my portfolio. They probably sit somewhere underneath them ones, so that gives you a good idea where I'm planning them ones to go. And obviously the last one, Hotel Chocolate, the order hasn't gone through, but maybe by the time you see this or this week, this is what's going to happen. I am going to buy about a 10% increase on Hotel Chocolate. I already have a position. I am looking to increase that a little bit more. The share price is doing what I want a lot of companies to do, is that I buy it and it stays flat so I can buy a decent position. And I think this one as well as this one, will do very well, as it's put in some good CV numbers through its online sales. And now that the brick and mortar based and the economy's opening up, people are back on high street, I'm sure these guys will do some decent sales, hopefully, and I'm sure they'll work out. So yeah, hopefully you enjoyed it. That's me just talking about the 3 stocks I bought and the 2 that I sold last week. Hopefully you got a little few tips in there as well, like for things that I look for when buying and selling companies as well. And yeah, just hopefully just keeping that transparency up, so you guys know what I'm looking at, what I'm buying, what I'm selling, as well as doing the portfolio reviews, which by the way, I am due for a UK portfolio review and a US portfolio review probably this week or maybe next week, so they will be coming your way very soon, as always. But yeah, hope you enjoyed it. As always, smash the like button if you're new and it was useful, subscribe, and I'll see you in the next video.